Oh, it scares her every time, man. Totally scares her every time, man. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Hope all is good with you. We are financial advisors here at Jazz Wealth. If you like financial advisors that talk the stock market, actually know what we're doing, and don't just throw you into some mutual fund. And by the way, also get like their lunch all over their sweater and don't really care about it. Well, that's us at Jazz Wealth. We hope you'll check us out if you're looking for a financial advisor that's here, that always is focused on everything, walking the walk and riding along with you. Then, of course, jazzwealth.com. Hope you'll check it out. You can also go there, jazzwealth.com / 2023. And there's Haley will send you a free PDF, no strings attached, about all the numbers for 2023. So your tax rates, all the credits that you can get, Roth IRA contribution limits, and every other account that's out there. We just put it in a little 2-sheet PDF that you can check out. And also, do I say it? Is it? You sure it works? Never find out. jazzwealth.com / guess the Dow coming back there. If you want to take a shot, $100, whoever can come the closest without going over. You go to jazzwealth.com / guess the Dow. It should be up and live now. And take your guess. You're guessing for next week. So you have until Friday this week to get your guess in for where you think the Dow will close next week. And we're going to put up like leaderboards and stuff. And right? Is that too much? Okay, we're putting up leaderboards to see where you guys stand, so you can see your name and everything if you're in the lead. And I think it's well deserved. If you can guess where the Dow is going to be next week, you deserve the $100. It's a gift card, and of course, if you're a client, you can choose the gift card, or you can choose to have your account credited $100. It does not count against contributions for the year, like your Roth IRA or anything like that. Totally allowable, even if you're not qualified. So have fun at that one there. Hey, the big news this week is the Fed. It's going to be a quarter point. Do you want to guess? You're guessing half a point? He whispered it like you're not sure. Cody's like, I don't know. I'll go half point. I'm going quarter point on the Fed hike there. Cody says half point timidly, but we'll see. That's the focus. Wednesday is the announcement there, and then the press conference. The focus will really be on the press conference. We, I think, are all kind of hoping that they do a quarter point, because if they don't, then that shows that they're veering from their stance of, we just look at the data. Whatever the data says, we make our decisions. That would show that they're responding to this bank chaos and everything like that. So we'll see. We'll be around, of course, to talk about it. Here's the S&P on your screen there. Last week we lost, on Friday, by the way, lost 1.1% right there, but still gained 1.4 for the week. It's the type of market that we're living in, right? That's just the way things are going. Regional banks were down 23%, but all the dip buyers, you want to know what banks they're buying? Everybody's asking me, like, what bank should I buy? All the banks that are getting bought, and presumably today, well, most were higher, are what's called the systemically important banks, meaning too big to fail. That's essentially what they're saying. Those were only down 13% and already saw a lot of that dip buying in there. Our biggest gainers, interestingly, as a whole today in all of our portfolios were the small cap and large cap banks. So if you were to just look through categories of our portfolio, it's, well, banks are doing well there. We manage our own funds here, so our portfolios, our clients can see the positions and kind of see how things are doing. Not kind of, they could see everything, how things are doing. Today, you might notice that those banks are doing well. Also, one extra bit of second level knowledge here that we're trying to do in 2023. Think differently than just the banks. What other stocks might be pulling back, or maybe ones to avoid? Well, one place you may want to look to avoid is life insurance companies. So you go, well, that doesn't make any sense. What's going on? That's a whole different thing. They hold mortgage-backed securities. They actually hold a lot of different types of securities, but mortgage-backed securities, the lending world is getting tighter out there. In fact, the level of tightness in the lending world right now ranks in the 91st percentile in terms of how tight it has become, just like that, like so fast. So when you look at things like that, those mortgage-backed securities won't perform as well, which means you might notice life insurance companies falling. So if you've been asking, why are they falling? That's not a bank. That doesn't make any sense. It's because they hold those to diversify away from their treasury holdings and things like that. A lot of people don't think about that, but that is the case out there. Okay, let's do like our normal kind of Monday review here. We'll talk about some of the things that we like to look at on Mondays. Here we go. More and more people are getting defensive, not politically. That exists already, right? They're getting defensive, and we can see this with the two simple charts that I put up here. This is basically just a ratio chart that shows when one is performing better than the other, that's either up or down. So when the line is going up, the cyclical risk-on type stocks are doing well. When the line is going down, the cautious, safe, think like, Tyson Foods. Now we can think of it as Target. Target now, as of Friday, is no longer a cyclical stock. On paper anyways. So line is going down, meaning people are becoming more defensive. Defensive stocks are outperforming the cyclical stocks, which says a lot because you saw what tech did last week. And then in particular, is it the defensive stocks here in the United States or defensive stocks overseas? Well, it's the defensive stocks here in the States, meaning U.S. investors are becoming way more cautious thanks to probably the bank thingy going on. Whereas, see, global stocks are outperforming the U.S. at the moment, and that's because everybody here in the States is shifting towards conservative, and when they do that, growth stocks don't get as much of the oomph as they normally do. So that's one cool thing to look at. If we look at the NASDAQ here, fell 1% on Friday, but still gained, 4.4% for the week. Huge volume trading. You may have even seen people talking about this. 9.3 billion shares traded hands on the New York Stock Exchange just last week. That's the largest we've seen in like 2 years. You got to go to January 2021, I think. Because that'd be over 2 years. To find something higher there. We had the S&P changes, which required a lot of mutual funds to shift their positions. They became overweight financials and less or less neutral or underweight other sectors. I did a class last week, Jazz After Dark, if you want to check out exactly what that is, what stocks moved, where they moved to, and all that. So you had that going on. You had quadruple witching, which is where every single futures option expires. So a lot of adjustments there, a lot of rolling, a lot of, presumably, just losses. That happens from time to time. And so huge amount of volume going on out there. And that really didn't stop here today. Now, as far as the, let's just do a couple more. We'll look at the Dow. So a little bit of a recovery there. The Dow's still working on doing its thing, not really participating, but using this area as support. We'll come back to the other areas here in just a second. Where do you go in the market here right now? Do you know? So where do you go? It's really sort of simple. If you know what's going to happen in the economy, then it's really simple where to go. Everyone is showing you right now where they're going based on, the tide, what they think for the day. Growth, tech, and energy are doing well and will continue to do well if the economy doesn't slow down. Do you think the economy's slowing down? Sort of feels like it, right? But if the economy doesn't slow down and or strengthens, okay, then growth, tech, and energy is where everybody is ready to jump at a moment's notice. We see that on days where everybody's like, yes, everything's good. That's where the money goes. The next day, oh no, everything's not good. Where do they go? They're going to, specifically, they're going to high margin, high return on capital, high dividend stocks. So I'm telling you that because I can't tell you what stocks to buy, but I can tell you, well, if you're setting up a scanner, what's the highest return on capital stocks in the S&P? Now look at their performance on days where people think, oh, the market and economy is going to be really weak. Those stocks, that's the ones doing well. So which do you believe? Right? It doesn't matter really what you believe there because they both can't win. Let's put it that way. But right now, the world it's just clear as day where money is going to go and where it's shifting back and forth as we go through this volatility here. So we take a look over here. We have recently a big shift into this risk on, no fear. The economy is going to do just fine. Go with that tech stock area. Go with the growth stocks. That's where people are going right now or have been. Here's our sort of ratio chart for that. Growth stocks wildly outperforming value stocks right now, and large cap stocks wildly outperforming small cap stocks. So large cap growth is where everybody's at, meaning they believe the economy is going to have this soft landing, this, it's not a big deal. The world just kind of moves on, and that's what it is. So there you go. Now you know exactly where everybody's going to go. We'll follow it as we go. Moving along here. On Mondays, we like to look through the sectors of the S&P. It looks a little small, but you can tell what's going on. And we're not really focused on the minute little details there, but the sector rotation is incredibly obvious here. You might recall from weeks prior, you could tell a little bit, but not too much. Here we have an obvious one. Money running from the financials. Financials dramatically underperforming, almost underperforming the market at the worst that it ever has. Well, at least looking back here a few years. So where's that money going? Is it on the sidelines? No, big money can't do that. They can't just let money sit there. It's going to tech. Oh, look, we can see the money just like basically flowing in there. Little utilities and communication services. Money moving out of materials, a little bit out of energy, but now that's starting to get a little bit of a boost there. And you could see clear as day where money's leaving, where money's going, and where people just aren't doing anything, right? Healthcare, where's healthcare? Right here. So healthcare, nothing going on a week-to-week basis. Healthcare is oversold. It's a neat area to look at for individual stocks, but not much is happening there. Not much is happening consumer discretionary. Not much is happening in real estate. Not much happening in utilities, a little bit. Consumer staples, a little shift towards safety, which we were just talking about a second ago. So there's times where you can see where money's going, and there's times where you're like, it must just be broad index buying, where people just say, get me into the market or get me out of the market. There's no real hot area. Right now, it's as clear as, I would say mud, but that would be contradictory to what I was trying to say there. Okay, we got to talk about this one here. So bonds. Here's a 10-year on the chart. We're using the 10-year futures just to look at this. Nearly twice as volatile as the stock market, which you may not care about if you're a long-term holder. But for the banks in here, huge deal, because remember that this is what caused this problem sort of in the first place there. The bond market was pricing in a Fed funds rate of about 5.5% by the end of the year. That has since changed to 4%. They're essentially pricing in about 75 basis points worth of cuts throughout the rest of the year. That's intense, man. So bond market is essentially saying, yeah, the Fed has lost it. They don't have control over this. They're going to have to do something else. So wild moves in the bond market. Just be very, very careful there. Speaking of wild moves, you got wild moves in gold. I will say this nicely. I will say this simply, and then I will move on. For all of you that disagree, I hope you're right. If you're buying gold here, and you're one of those that says the world is going to end, or I want out of XYZ and I want in gold, that is an emotional trade. It's an emotional investment, and you deserve everything that's about to come to you, because that is one of the most ridiculous things that you can do at the moment is say, oh, I'm going to go into gold. This is exactly behaving like Bitcoin did, where in the short term, I'm only saying the short term, in the short term, its value is driven only by fear. That's it. Which means when the world gets better, it's going to revert to its notional value, right? What it's actually worth for used in production and storage and things like that. This is ridiculous. And I've seen people post, like our clients don't really do this, but I've seen people post and people saying, I'm going to go into gold. And I'm like, have at it. That is I'll give an example. When I took my private pilot's test, where you get your license. The guy had asked me a question, and he wasn't being very nice anyways, but typical, examiner, sort of mean guy. And he asked me a question about something, and I told him what I was going to do. And his answer was, that would actually be the stupidest thing you could do right now if you did that. And he said it just like that. And I thought, I failed. That's the end of it. And so jokingly, I said, well, no, you could do that. I'm not going to do that, but you could do that. And he sort of chuckled at it. And I don't know if he actually laughed, because he was a really mean dude. But that's how I feel about gold. That is actually the stupidest thing you can do right now. If you do it or you have done it, wish you luck. I hope I'm wrong, But as history, statistics, fear, volatility would all suggest, you're making a big mistake there. Anyways, in our notes from Jazz this weekend, actually, we covered a sneaky little change that the Fed is doing at the discount window that has really shored up a lot of these banks. It doesn't seem to be making headlines. You're talking about banks that have been normally just, they don't do this sort of thing, to 100 times more banks taking advantage of this through the Fed. That's not exaggeration. $500 million usually traded hands throughout the day at the discount window. Not a big deal, sort of a blip on the radar. You didn't want to be caught doing that if you were a bank. To now $500 billion. Oh, actually, I don't know. Is that 100 times? That might be more than, he doesn't know. So we don't know either. Anyways, 500 million to 500 billion. I think that's 100 times. Those are big numbers. I just don't know. So nonetheless, we covered that in our notes from Jazz if you're curious. Very, very cool. We do a email every week for clients there just to give you an update on the geeky side of things, and I try to make it simple. Credit Suisse, do you own it? Well, I hope not. But if you own it and you're wondering whether you should hold it, now that, it's worth $1, if you hold it, you will get one UBS share for every 22.86 shares of Credit Suisse that you have. This equals out to 0.72 francs or 0.72 francs. I don't even know how you say that. And if you convert that to dollars, it's 82 cents you will get per share in share equivalents. So good? I don't know. But that'll all be behind us there. Credit Suisse also UBS also got loss guarantees from the Swiss National Bank there, worth $9 billion. So they're essentially getting to take this over for next to nothing. And they're getting 9 billion francs worth of loss guarantees. So a little bit of a cushion for things that they didn't have time to research. And the Swiss National Bank says, we'll give you a $100 billion line of credit, so to speak, for doing all of this. We appreciate it. That's what's happened there. The deal will, UBS says this deal will pay itself off, meaning it'll essentially come off their balance sheet in 2027. Yeah, seems like a good deal for them. Not a good deal for the bondholders that had convertible bonds. Those are worth nothing, but that's the risk you take with those. Netflix here. Bloomberg says that the ad-supported service, that new sort of, it's not cable, but we're going to have ads and you're going to pay for it. I don't know. They said that ad-supported service now has officially over 1 million users that said, you know what, I don't want to pay for cable, but I'm going to pay for Netflix and still have the ads. Darden Restaurants here. Outback, popular restaurant that they have there. Barron said these guys are going to be just fine. Any economic downturn that comes, this is the restaurant they want you to focus on. I don't know, to be honest. I have not dug in any deeper. I'm just reading off the news at this point. New York Community Bank. So these guys are sort of like the UBS and Credit Suisse thing. So New York Community Bank comes along and says, we got permission to acquire some of Signature Bank's assets. Presumably the ones that they want. Also, at a steal, fire sales going on out there. I don't mean to laugh at it, but that's what's happening. As opposed to FRC Bank, which is still trying to figure things out. Second downgrade for them today, and all kinds of news there. For whatever reason, JP Morgan's really trying to help them out. And I don't know if they're just trying to look like they're nice until they offer them $1 a share or something like what they did with Credit Suisse. But for the moment, that's what's happening. Pinduoduo, you might notice a little bit lower there. Revenues came in weaker than expected. That's a sort of a last one to focus on. Our Jazz After Dark here tonight, we're going to talk about price returns versus total returns. I'll give you the basic explanation of it, and then we'll move right into the fun, geeky stuff, breaking down every single index if you would have invested in it, every single sector. I'll show it real simply on one chart there, right? That's happening tonight? That's the one? It's happening. Okay, that's good. You just had that look like, oh boy. Yeah, so all good there. I will attempt to answer your questions here. And hopefully that is successful. If not, I will run away and tell you I don't know the answer. I got a haircut. Yeah, middle of the day Monday haircut. I was in and out, man. That's the way to do it. If you can do it, you do it that way. And sorry, Chris, you're right. Ad-supported users. That's the way they should say it. There they do say it. Yeah. March Madness bracket is already a bust. How about you?
Yeah, I was busted day one. Yeah.
Day one?
Yeah.
Well,
Everybody's was, but
oh yeah, because Duke, right? Like, how do you not?
yeah.
The
yeah,
whole
close.
Final Four was out, right?
Yeah, yeah. We had two or three one seeds are down, so that's a big deal.
Yeah. I mean, like,
Yeah.
just if you'd have picked the Final Four from last year, you're out. That's it.
Yeah.
See?
Yeah, that's the idea.
See what I learned while getting a haircut?
That was really good. That was
Yeah.
really good.
That was the guy cutting my hair. He was going on about it, and I'm like, yeah, that's something, man. So I learned something, just enough to hang for a second.
There you go.
That's what these people don't realize. Like, I'm only one step ahead of you.
Oh man.
No. With sports, I'm well behind. I do not track that. So bad that I was telling Cody earlier, I thought Lamar Beckham. Lamar
You
Beckham?
got the last name, but it's not Lamar.
What's his name?
Odell.
Odell Beckham. That's what I thought. He was long retired, living on a beach somewhere.
Well, you mixed him up with Plaxico Burress, so that was tough.
And then I thought that was the same guy that shot himself in the thigh.
Yeah.
Okay, let's focus on the stuff I can help with here. Is it possible the bond price action we saw last week was due to corporate accounting treasury departments moving cash in excess of $250,000 to USTs or money market sweeps? Yes. Small, medium businesses, millionaires realized they had better to protect. Yeah. So I don't mean to like oversimplify that, but yes, that's what's causing FRC. That's what started the nastiness there back in SVB Bank. Oh, so I only look at this because of you. Yeah, there you go. You get your 3M giving a little bounce there. Okay. Wow. Sounds exactly like a flight instructor comment. He must have been prior military. That was the DPE, so he might have been. I don't know. Everybody told me he was the best guy to go to, and boy, he left me scarred and confused, man. I was ready to quit when he was done, and I passed, but I didn't do anything wrong. It was just he made you feel like the whole thing was going wrong. You want to start a position in AXP and Morgan Stanley with him getting dragged down by the regionals, both outperform. I can't tell you to start a position. I can tell you that we did add to our positions last week in those stocks. So we do own it. I am biased in that respect, but yeah, to me, that was a no-brainer. That's a couple of the outperformers, and that was the approach that we took. We'll take the outperformers. Yeah. And I'm sorry, I'm missing some questions there. There you go. Yeah. You think we test the October lows? I would have thought so, to be honest. I'd have been wrong. Of course, I'm still wrong on that one, Tom, but I would have really thought that this last pullback found that support, and maybe still could, found that support and then just falls apart through the lows of it. Yeah. Tom says, you work security at Samsung store. Are you the gardens of... Boy. I was just telling Cody I needed a joke for this podcast. Oh, boy. Yeah, you got me on that one there. But yeah, I would have thought we would have tested the October lows. And Asraf, I see that there. Yes, we all get a little older. It's not fair. I get to see, you guys see me every day. I do not see you getting older, but you're getting older too, man. This was happening. If you buy a financial stock, then dump some losers, do I avoid the wash sale or do I have to be a day trader? If you buy a financial stock, then dump losers, presumably other financial stocks, you would get the wash sale. If it's the same stock, of course not. Yeah. And I'm not sure. So that would be the answer in the eyes of the IRS anyways. Tech is getting all the money. You can see the FANG stocks moving higher. Yep. certainly helping. Today was a little different though, because it wasn't just those stocks. Microsoft was lower, Amazon, Alphabet, all lower on the day, but you had broad, large cap bank buying, healthcare, industrials got a bounce, which is good for them. Consumer staples, energy got a good bounce today. So today was more broad than what we've seen over the last week. So I would disagree a little bit on that one, only for today. Yep. Yeah, I might look like I'm getting older, but I'm still just a little immature kid. What's the best way to short gold? You could use the futures market if you're okay with that. You could use the GLD. That's still a direct proxy for gold. If you're not comfortable or don't know about the futures market, then GLD probably be the easiest way. Would be the easiest way to participate. Yep. What do we think of OGN? Well, oversold. Yeah. Here, let's go to it. So there's a lot of stocks that look like this right now, but I'm a sucker for these because anytime a stock is oversold, way oversold relative to itself, I'm attracted to that. So I can't blame you for liking that. No. Wash sale only happens if you're buying a company you sold within 30 previous days. Yeah, I'm not sure on J-Dub's question. I think he was saying that they would be two separate stocks. And as long as that's the case, you're fine. Yep. You bought your IAT last week. Okay. Still sitting on cash or all invested. We're down to 26%. So last week's Wine and Wealth class actually went through some of the positions that we bought relative to what we have, so we could show that and show our cash position. So that's the answer. There's also an ETF called Dust. Oh, well, see, I don't like the inverse ones though. So if you have the choice to go straight short on GLD or buy an inverse ETF, I would just short GLD personally. You're taking out some of your costs there, and it's kind of like the invisible cost. But if you're just trading it, in and out for a couple of days, then it doesn't matter. But if it's more of a hold, I would rather be short the GLD and negotiate your margin rate a little bit. Yeah. Two separate stocks, but like stocks. No, that wouldn't count. And you could ask your brokerage firm as well. Somebody like Interactive Brokers or TD, they won't report that as a wash sale because they're not like enough. However, if you did one financial ETF for another, then even the most aggressive brokerage firms would still report that as a wash sale. You can't do that. And that's exactly what Brent's saying there. If you go from SPY to VOO to SPY to VOO and you're bouncing back and forth like that, your brokerage firm, I don't know of any that would say that's not like enough, because that is like enough. So they would report that as a wash sale. And I'll tell you what, if you want to try it, if you're ever curious, I know like Thinkorswim has a wash sale calculator. So you can actually put in two symbols and see if it triggers. Interactive Brokers has the same. But you could always just take $1 and buy one and then sell it the next day and see if your statement shows wash. Yep. You got it. All right. I'm going to wrap it up from here and get on about my way. You guys enjoy the rest of your day. We'll be back all week here to keep teaching, keep educating, talking about the markets, see what's going on there. And I hope you'll join us. Appreciate those of you that have joined us, and we'll see you tomorrow.